Welcome back, and joining us with her take on today's market performance is Faheema Adia from Momentum Securities. Faheema, thank you so much for your time today. Now, President Trump saying that the war in the Middle East will end anytime soon, or very soon, his words in particular. Look, I'm not convinced, but it seems that markets are, with oil prices easing and riskier assets back in the green. What have you been making of it all? Are you convinced?
Afternoon, Kaleng. Thanks for having me. Yeah, so it at least had quite a positive impact on the markets. You know, we saw the JSE up today, and there was some recovery across all those sectors. Whether this does turn out to be the case, it's something we can't really say. I mean, on one hand, he is saying that the war is almost complete, but then on the other hand, he's also said that it will not stop until there's been a regime change in Iran, which is also quite confusing.
Yeah.
But regardless, you know, we did at least see quite a sharp pullback in the oil price, and I think that's what's really been beneficial for the markets and leading to more of this risk-on approach. It's also been positive for resources on the JSE as we see investors finding the confidence now to just move out of cash and back into shares and commodities again.
I mean, that oil price is down, what? I think it's trading just below $90 from highs of close to $120 a barrel over on Sunday. So a big difference on that front. Let's take a look at what's playing out here at home. We got those GDP figures, another quarter of growth, the fifth consecutive quarter of growth that is, and an even rosier picture for the full year period, with growth at 1.1% for 2025. Your read on the print, I mean, digging deeper into it, we do see a mixed performance across industries.
So look, it was an improvement from the 0.5% that we saw annually in 2024. For 2025, it came in at 1.1% on an annual basis. But I mean, it's just not enough, I think, in my view, to really see job creation or meaningful economic recovery with such low levels of growth. We're going to need to see a lot more than that come through. And the other issue is it was also below the Treasury's estimates of 1.4%. So it does look like the finance industry contributed the most to that. It's understandable that the manufacturing industry was actually the drag there, just because of the higher costs that have been hitting that industry in the form of high electricity tariffs, also water costs. And I think that these headwinds we're now seeing from the US Middle East conflict in the form of the higher oil price is also not going to be positive for the GDP forecast that we've got this year.
And I mean, you talk about the manufacturing sector not performing well. We've seen it with big business. I mean, we can talk about what's playing out over at AMSA. We can talk about, you know, Impact also considering closing its spring mill. So these are things that are actually happening on the ground. Yeah. Hey, I mean, it looks good, but we could do better. Let's take a look at what's playing out on the corporate side. Absa's bets on the continent seems to be paying off, with its rest of Africa operations really fueling earnings there. HIPs, I think, were up 12%. Your read on those numbers?
Yes, I think it was a good result. Seemed to be broadly in line with what the market was expecting. The share price has been up quite nicely over the past few months. So there was a case, I think, of some profit taking on these positive results. But I think it's quite interesting to see how many companies have had to look at other markets in Africa, in Eastern Europe and so forth, just to find the growth that's really lacking in South Africa. But it is good to see that they are finding this in other markets and finding a way to keep the growth in those businesses going.
And says a lot about the growth we are seeing here at home, and how we need to really get our tools and get things going. Of course, the government is looking at infrastructure to be, you know, the backbone of the growth here at home. You speak about companies looking for growth elsewhere, and now I'm thinking of high props numbers. While South Africa does anchor those earnings, we are seeing Eastern Europe also performing quite well. They're also looking at organic growth as well as acquisitions on that front. Investors smiling all the way to the bank shareholders, that is, as it also raised its dividend payout ratio. A good set of numbers there, right?
Yes, agreed, Ntoleng. I think it was a decent set of results. We are seeing turnover increases in both the South African and the Eastern European portfolios. If you look at that Eastern European economy, it's also showing some decent growth and recovery. There's been positive rental reversions. The vacancies are quite low. They've also managed to reduce the debt in the business, so that reduces the loan to value. And like you said, they've increased the dividend payout ratio, which is also quite important. So overall, I think it was a good set of numbers, but it is starting to look a bit more fully priced from a valuation perspective, and if you consider the current dividend yield now.
All right, let's get your stock pick. Where are you seeing value at the moment?
So I'm currently seeing value in Prosus. So most are familiar with this one. It is the international arm of Naspers. Its most valuable holding, of course, is Chinese gaming and tech company Tencent. It's been undervalued now, I'd say, for quite some time. And we did see a meaningful turn in that share price today, up more than 8%. What's been driving that has been the recovery in Tencent after it reported some positive AI developments on its WorkBuddy AI agent. But Prosus also has a portfolio of other digital platforms in the food delivery space, fintech, also e-commerce that also have good potential. So I think it's just looking like a good opportunity to buy this one, looking quite undervalued on a forward PE of 10.5 times, also trading at quite a big discount to its NAV. So we do expect to see a lot more upside on this one going forward.
Let's leave it there. Faheema, thank you so much for your time and taking us through trade this evening. Now that was Faheema Adia from Momentum Securities.